This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us again is one of our favorite guests, GATA's Bill Murphy. Great to have you back on the show, Bill.
Well, I don't know how exciting I'm going to be today, but thanks for asking me.
We certainly have had quite a pounding this week once again in the metals markets. Gold sent well below 1,200 again, traded under 1150. Silver back down under 16, traded a good part of the week under 1550. And quite frankly, I don't know that I've seen sentiment this bearish among the metals community since probably 2008, maybe even prior to that, might even be all the way back about 20 years ago.
Yeah, this is about as bad as it gets. And, for my column at the Metropole Cafe, on my title, I think tonight's a contrarian's delight here, because you're absolutely correct. This is as negative as I've ever seen it, and with almost no bulls out there, in terms of the mainstream world, and even in our world, the technical traders. The thing has been so bad. Every rally is sold. It's like clockwork. It rallies up. The gold cartel traders report to work around 3 a.m. New York time. I call it Plan A. Every single day it goes up, then around that time it goes right down again. Did it today? Did it yesterday? I think it did it the day before. So this is a very, very tough time, and at the same time, if there's ever a setup for a surprise to the upside, we ought to be here.
Just want to give a quick anecdote as to the level of bearishment and the terrible sentiment we're seeing right now. We're having, at SD Bullion, we're having multiple customers call to sell to us orders that are still in progress, meaning that like we received their check 2 days ago, we're preparing to ship their order today, and they want to sell the metal back to us because they're sure silver is going to be $5 cheaper in a week or two. I've never seen that before.
That was my question. Have you ever seen that before?
I've never seen that before. So, and not only do we have lots of people selling the metal outright, metal they own, but multiple customers are selling metal that they have acquired less than a week ago. It's quite astonishing.
So, Doc, let me just for clarification. Are you talking about people who have made orders before this Monday, and that they're selling? I mean, on Monday back on March 11th, we dove down and then popped back up on silver. So we kind of like going horizontal in the last 48 hours. So that's why I'm asking that question. It'd be really interesting to see if people are freaking out just the last 72-hour period, or was it people who had bought $1 higher or whatever last week or something like that?
I mean, it ranges. It's people who have placed an order just a day or two before. It's people who have ordered maybe a week or 10 days, and we've received their payment 2 or 3 days ago and notifying them that we were going to ship their order today, and they call us and say, like, hey, would you mind, rather than shipping it, can we sell it back to you?
Wow, that is pretty amazing.
That sure is.
And I mean, occasionally that happens all the time. Circumstances come up. People have to buy a house, or they have a financial emergency, but we're being told by people that, no, hey, I think silver's going lower and I'll buy it back cheaper. It's quite astonishing. And these are silver investors who are long-term bullish, but the sentiment is so bad that pretty much unanimously everyone is convinced the market is headed lower.
Well, that's part of what I was talking about, the contrarian's delight here. If you ever have a setup for a surprise to the upside, then maybe something dramatic, this would be it. Doesn't mean it's going to happen, of course. But
exactly. I mean, that being said, when we have had big beatdowns like this in the past with silver, typically it culminates in a Sunday night $2 smash with a V spike, and then by the next Monday afternoon it's trading higher than it was prior to the beginning of the waterfall cascade on Sunday, is what we've seen the last few times.
Yeah, I would take the devil's advocate argument to that. I don't think we're going to get that kind of a washout sentiment as marking the bottom because of the duration of this long bear market, 4 years and over 3+ in gold, and the levels of carnage that you see in the mining shares are even worse. And we're on the order of like matching in a 40-year period sentiment lows in mining shares, that have only been seen on par with where we are now a couple of times, and not below it. It's interesting, today we've got the dollar going back over the 100 mark for the dollar index, and yesterday was kind of reasonable with a bounce coming in mining shares, or stabilization of the mining shares the day before, and then metals kind of slowly pulling themselves up a little bit Thursday, and today we're going horizontal, even though the dollar is doing another strong move. So, I mean, all things considered, things are just terrible out here, and the sentiment is such that this is the kind of action that you'd expect to see at a bottom. And scratching a little bit below the surface, there are some things that look positive along the lines of what I just outlined. So, I don't think we're going to necessarily have to see a big capitulation crash, and it's more like more of the same of what we've already been doing for the last year plus, and built upon what has already been, at that point in time a year ago, a very long bear market stage. And it's just a never-ending cartel management of prices and pounding to punctuated lower bottoms that, we're living through. So, Bill always talks about how things will eventually turn around at some point because physical will put in the floor to the market. And I think the floor part is partially there. I mean, all things considered, we still haven't seen this, gold did dip below 1100, never mind 700 and some of the other outlandish forecasts that people are talking about because of the Chinese bid. It's there. The physical market is supporting the market, but China is playing along with this manipulation game too. They're trying to build their reserves, and they're not calling bluff on the West.
I'd like to get your take, Bill. Do you think we'll see gold pushed under support 1140? Do you think it could trade down to the major support at 1,000? And I guess the same thing for silver. Do you think silver could break 1450 and trade lower? What's your take?
Well, the one thing we all know is that you never can say never. I'm a contrarian here, and I think this ought to be it, and we could go back up because you've got a setup here like we've been talking about where the whole world is bearish. And as Eric's been saying, we've had this long. It's not like this is a new thing. This is just going forever. I feel like Lawrence of Arabia in the desert or something. Just keep plodding along. But I got one thing that's disturbing me, and especially would like to speak to you guys on it. It's your specialty is in silver regarding the open interest. I keep been writing about for years how this high open interest has been bearish, and it's back up close to its nearly all-time highs, or 4,000 or 5,000 contracts off its highs of the past period of time and years, and it's been spot on in terms of the bearishness of the market the whole time. And here you have a market that's so under the cost of production. The norm would be for open interest just to dwindle and people getting out. But of course, in a rigged market like this, as we've seen, all bets are off there, and it's horrifying to see it so high. And a number of us over the years thought, maybe there's some smart commercials in the physical market. They're going to pull the plug on J.P. Morgan and the shorts. It never happens. It never happens. And here we are. We're going way up again, and I keep looking for a change, and I don't never get it. So I would like your thoughts on that.
Well, I don't have the answer for sure. We've talked about it as well on previous shows. I don't buy into the Chinese theory that a lot of people advocate as far as China, just trying to get a hold on the COMEX, because that's not a usable weapon. COMEX can just cash settle, and there would be no point in China trying to do that. I think the most likely scenario is probably something that J.P. Morgan's doing when it comes to managing their physical book and their vaults with OTC trades and some other stuff that's going on as it layers over and on top of their COMEX position. But what that is, something that I can't identify. I don't know what the answer is.
I'd like to get your take on the recent story that just broke midweek with Venezuela in talks to sell off over 100 tons of their gold reserves to the bullion banks. What's your take on how much of this latest takedown might be related to that, and the banks with insider knowledge of knowing those talks are in discussion, and hey, we're going to get 100 more tons of gold, they'll rehypothecate. We can use a little bit of our supplies here, versus just the exponential rise of the dollar that we've seen over the last couple of months.
Well, they always seem to come up with gold from some of these countries whenever it's needed, don't they? When they talk about Libya or, Venezuela and all these different countries where all of a sudden, I don't know, the Ukraine, it's all of a sudden it keeps cropping up. And from my background, we thought the central banks would have hit the wall in the gold cartel with what they've been doing a while ago, and that has not been the case, because even if we've just seen this good work by Cooge Jansen and Chinese gold demand and that of, the World Gold Council and Goldfields Mineral Services, they've understated the demand for years. That's how GATA got started. I mean, I learned this from Frank Venerosa when I talked to Terry Smeaton at the Bank of England. And it's always understated because they can't match up the gold coming out of the central banks for the price suppression scheme. And so that supply they can't, so they always underestimate demand. And now they've just done it again with China. So at the same time, they keep coming up with it some way, somehow. And whether they're going to go to their last, number of tons of gold, I don't know, but it never ends.
And Frank Veneroso's numbers, correct me if I misrecall what he had forecasted back in early 2000s, late 1999 period. He was talking about central banks going through roughly half of their gold by, say, 2013, correct, or 2012?
Well, the initial thing, he had the gold loans, way up in 1997 and 1990, way more than anybody was saying, and of course, that was part of the scheme. And then we had a conference in Durban, South Africa in May of 2001, great conference, and Frank spoke there, and he thought the worst case that the central banks would hit the wall in 10 years. And that was 2011. And it was like hallelujah time, Talk about being spot on, but it wasn't the case. They were saving up for an attack, and then they hit it again. But it is ironic that that was the year in which we got the big spike in the price.
And by his estimations, was when he said hit the wall, did he mean that they would have gone through half of their...
Just that they wouldn't be able to supply the market like they were doing around 2001. And that's, by the way, that conference was almost the exact low in the gold market. The price then was $256.
Right.
So, I mean, his call in terms of understanding what was going to happen and was very prescient. But in the end, and here a decade later, they said they were warming up for a big hit job.
Well, Doc, to circle back on your question, I think that's actually pretty good insight. I suspect that's a factor as to what's going on. Venezuelan gold possibly coming to the market, or probably coming to the market, given the basket case of their economy. And then, the bullion banks playing games in advance of that, knowing that they're going to have some physical supply to replace what they take off the shelf in the last 2 weeks to help push markets down. We also had expectations building in February that by the end of February, going into the first week of March, that India was going to liberalize a lot of their restrictions, and they failed to do that. And they're also talking about how they're scheming with ways to do all kinds of paper trust products for the banking system to try to lure Indians to purchase paper gold. That's not going to go over very well when it comes to dowries for weddings, because you can't wear paper in the same way as necklaces and whatnot. So this whole delay of buying in the wholesale chain in India that amounted to maybe as much as 50 metric tons of gold, believe it or not. I mean, there were some people speculating that 100 metric tons of gold was going to be consumed by India in March when the import restrictions would be liberalized. So that fits into the timing in the last 2 weeks, and this whole Federal Reserve job owning session that we go through every week practically is a factor as well. Now people are expecting that the Fed is going to raise rates as early as June. That's one of the quarterly conference call meetings associated when Yellen comes out and explains what the Fed is doing. So that's why people are looking at that time frame. And it's quite possible, actually, that they might pull that off and then all of a sudden realize, the economy is falling apart, and most of the economic stats are actually pretty negative, with the exception of the massively manipulated unemployment report. This University of Michigan Consumer Confidence Index numbers was out today, and they stink. I mean, it just goes on and on. Housing numbers stink, and wherever you look, with even government reports, numbers are pointing towards an economic slowdown worldwide. In the United States, threatening to fall and stumble very deeply as well. The other thing, too, that I want to throw out here that's kind of like an echo black swan to this oil thing that we've seen in the last 9 months is that in Cushing, Oklahoma, where one of the major storage centers are for the American and Canadian oil system, and where the West Texas Intermediate crude benchmark is set, we're running pretty close to a probability of running out of storage in as early as June. And if that were to happen, and all of the oil that comes from the Midwest system hitting an inability to be stored at the Cushing point, we may very well see, another $10, $15 price decline in West Texas Intermediate just to be able to set up the economic incentive for an arbitrage to deal with all that oil that just can't be stored, and then you'll see incremental movement of oil out onto shipping tankers and other ways of storing it outside of the United States, primarily from Cushing. You'll also see a huge spread that will develop between Brent and West Texas Intermediate, and you can actually see that beginning to happen in the last month and a half or so. If you look at the two and layer on top, Brent is beginning to develop, roughly $10 spread over West Texas Intermediate, and I wouldn't be surprised to see that if it go up to like $20 even, in a couple of months. So, the bottom line in all that and how that relates to precious metals is that we've already gone through a couple of months where most people are completely indifferent to the pain that's going on in the oil sector and what that's going to mean to our economy and how it fleshes out and impacts other markets. Particularly when it comes to the oil derivatives, anywhere from $200 billion to $500 billion worth of derivatives might be on the line when it comes to all of the debt that oil companies are no longer able to service given the lower prices. And people have been expecting oil to bounce, later this year, second half rebound, all that kind of stuff. And frankly, with this storage hiccup coming, and the fact that even though, rig counts are dropping pretty quickly, the supply of oil on a weekly basis keeps going up in the United States. So I think we've got a problem coming in the somewhere, June, July time frame, give or take. And that's something that, frankly, I don't think most people are factoring. So it's like an echo black swan to the initial oil black swan, and that will probably, if it comes after a Fed rate hike, it'll make the Fed turn around so fast you barely have a chance to blink, and all of a sudden we'll be talking about quantitative easing again in the third quarter. So things to look out for.
Well, I want to circle back here to what we began the show, kind of talking about sentiment here. A lot of precious metals investors, frankly, are ready to throw in the towel. So I kind of wanted to ask you, are you giving up on gold, Bill? And what would you have to say to those who have really been waiting for the next leg of the precious metals bull market for years now?
What else would I do? I can't give up on it. But, no, honestly, I mean, I think we have everything that we've gone through, black is white, white is black. It doesn't matter because of the gold cartel. It's been made negative, then price action makes market commentary, and then everyone gets bearish and it feeds on itself. They know what they're doing, and things are not good, as you just talked about. Behind the scenes, things are really terrible, and the average person in America, and now we're seeing talk even among the Muppets on CNBC, where they're actually saying, well, the strong dollar and what's going on in oil is affecting earnings, and all of a sudden they're coming down expectations dramatically. And I think that's why you're getting this wild action in the stock market. But getting back to gold and silver, I think we've got the biggest move in market history coming. And all the things that we've all noted and you guys have duly talked about, it's all going to come into play. They just made it not come into play, and it's all going to. And when it changes, it's going to be violent. And we are going to get into a situation where it just moves very fast. I'm not in the reset camp because at least maybe over a period of time, but overnight it would just bankrupt too many people. But it's coming, and this is actually great buying opportunities in here, and I'm as bullish as ever. Big picture, short term, who knows? I do think this is a contrarian buy time, but boy, oh boy, all the things we've talked about and what we know and what they've done, that's the advantage of a GATA analysis, is that, you don't have to fall prey to the normal consensus mainstream opinion of why gold and silver stink. We know what these bums have done and what it's going to lead to, and it's probably going to happen, explode out of nowhere. And is this difficult and painful to live with? Oh my gosh, it's awful. It's like, I use the term in my commentary almost all the time. In 2 months, so it's Groundhog Day. Groundhog Day. It makes Bill Murray think of what we're going through look normal.
See that in the charts this week. All you have to do is pull up a daily chart of gold or silver, and you can see the algos in action pretty much the entire day.
Yep. It's just relentless. There's not even a break in the action.
You really don't even have to be a trader. Just look at a chart when the algos are running like this. You know what's going to happen in the next half hour.
Pretty much.
Yeah.
Before we wrap up, do we want to talk about the dollar more?
Well, I think this has been pretty good. The dollar, obviously, it's gone, bonkers. And at some point, as I was starting to mention, they're realizing it's all of a sudden it's really starting to affect maybe our stock market. And, knowing the way the Fed operates and the big money and power, they're going to say, we got to do something about this. Come up with some reason or some excuse to get it down a bit. But I really do think we're going into a very exciting time, and it's even interesting that you would ask me the question about, still being bullish or something like that. That wouldn't have even happened a year or two ago. To ask someone like myself that has been in it since, as I said, our conference in Durban, South Africa was when it was at 256. So times were bad then, but nobody was in such pain. Now the pain is palpable everywhere because of, the XAU is lower than it was when I started. Quite frankly, 16 years of investing in the shares, as a rule, there's been some great wins, but it's been a total dud, a fiasco. If you'd have told me way back when that, gold would be as high as 1150 and silver would have gone from 4 to 15, I thought, man, I would have cleaned up. And yet, many of the companies are going out of business. And as I said, the XAU is back to where it was when I started. It's been because of what they've done, it's been a total fiasco. The industry's a mess. They don't do anything about their problem. They are a horror show. God has tried for years to, tell them what's going on so they can do something about it. They could care less. All they care about is their salaries. We go to the press. And my buddy Chris Powell, by the way, is over in Asia right now doing some GATA work, which, good for him. But you go to the press, you tell them what's going on or ask these questions to the central banks, and they come back, and this is a guy, a real well-respected guy. We can't ask those questions to the central banks. We'll be fired. And that's a quote. That's how egregious and bad this thing is. But because we know how bad it is going to blow up, and it's going to be spectacular, and all this pain will be worth it. But that doesn't help anybody on a month-to-month basis here. But what's coming, it will be spectacular. So this is a time to be focusing on it, on gold and silver, not a time to be running away from it.
Yeah, that's really important to emphasize, too, because the bottom line is that this can't go on forever. I just saw a recent report talking about the 10 largest gold miners representing some 30% plus annual mine production, and they're all cash flow negative. You can't operate a business like that forever, and that's the large players. The mid-tier and the smaller producers are even hurting more, and there will come a time when there's just not enough physical to continue on these games that the cartel plays. The constant refrain and rebuttal that we get to, pounding the table about that point is that, well, it hasn't happened yet, therefore it's not going to happen anytime soon, if not ever. And it's like saying gravity doesn't work. Eventually gravity will work. You throw a ball high enough into the air, eventually it is going to start turning around and falling back to earth. And the laws of economics haven't been they're trumped by the ability for paper machines to layer over on top of physical gold. There will come a time when the system demands higher prices, but it's almost impossible to try to figure out anything other than midterm type swings in the markets. On the short term, calls are constantly made and they fall apart. And even the stuff I was doing in the last month or so goes to just show that. It looked like we were actually going to settle and turn around after that January 22nd peak, and then coming back in late February. But then boom, here we are again. We're back down, testing the lows again. And maybe it's that when the stock market finally rolls over and all the other assets that the Federal Reserve and other central bankers are trying to suspend in animation at higher prices, when that finally blows, those are markets will take down pretty much everything else, particularly the bond market. I mean, everything is so artificial at this point that it will just require one or two more markets to stumble, like we already seen in oil, and the ramifications to the oil hiccup haven't actually come through the market yet. So I don't know. It's hard to see how we're going to get out of 2015 without at least 15% correction in the S&P 500 and some serious pain in the interest rate space. And then eventually that hopefully would create a much bigger demand for gold. And this whole thing with Greece and Germany and the EU is not over yet. I mean, every single week it's kind of like a tennis match between the two of them, and they're lobbing insults and fake game theory proposals and whatnot. But the bottom line is that it still is pretty much the same as we were 2 months ago, with the June time frame now being the end game. And I don't think they're going to be able to pull another can-kicking session out of any kind of negotiation. So they've had a 4-month reset, and then come June we're going to go through the same cycle again. And Greece ultimately, I think, is going to exit the euro because they're going to have to, despite all of the follow the money logic of the people considering that would create too much financial pain. But ultimately, I don't see how anything's going to resolve itself any other way. So all these things, Ukraine as well. The United States and NATO are getting more and more belligerent. Victoria Nuland was testifying before Congress, literally lying every other sentence that came out of her mouth, and the belligerence against the Soviet, or the meaningful slip, the Russian position vis-a-vis the Ukraine is increasing, and we're sending 100-plus armored units or tank and armored cars to Baltic states. I mean, the escalations around the world are increasing. The Middle East is getting hotter. So once again, 2015 is probably not going to exit without at least a couple of more black swans coming, and that's probably going to be positive for precious metals. Time will tell.
Well, before we wrap up the show, just wanted to give the listeners a quick update on what we're seeing in the physical markets here in the U.S. It's been interesting. Demand has definitely been steady and consistent, but it hasn't been quite as explosive as one would expect, with silver trading down around 15.50 and gold around 11.50. The U.S. Mint has kind of leaked some rumors that beginning next week their production allocations will be decreasing. There'll be less Silver Eagles available. I think through mid-March. Let me just glance at the updated Mint numbers. The Mint has sold 9.925 million Silver Eagles, so almost 10 million, and we're only in the first half of March. So we still have the Mint has been running really at capacity, but premiums haven't exploded like we have seen in previous crashes and takedowns. And personally, I think that's an indication, a sign of a lot of investors waiting for lower prices, sitting on the sidelines, ready to jump, expecting silver and gold to drop a bit further. Whether that happens remains to be seen. But for right now, in my opinion, it presents an excellent opportunity to either acquire some insurance or add to your insurance stack, where you have low spot prices and really historical low premiums as well, which typically we haven't seen previously in the last 10 to 15 years when we've had big market dips. I mean, I remember back in 2008 when silver dipped down to $8 an ounce, and Silver Eagles were anywhere from $6 to $7 premium, and even 100,000 ounce bars were a couple of dollar premiums. So certainly premium-wise, it's a much more advantageous time to add to your stack in insurance currently. Well, Bill, any last thoughts before we wrap up the show this week?
Yeah, just real quickly, it's part of the contrarian thing we've been talking about. I think that's it's good information for people to know. This kind of a dip there's not an interest, and it just adds to set up for what's coming, and I guess I'll leave it at that. But I'm not down at all. I mean, I'm tired of dealing with the day-to-day groundhog stuff, but it's coming to an end, and the tough part is hanging in there and being able to tell people what's coming without repeating yourself over and over again and sounding like you're crying wolf. But the wolf will be real, and it's coming.
Well, Bill, for listeners who might not be familiar with your work or GATA, where can they find GATA's work as well as your own?
Well, GATA.org. Chris Powell does a great job. You can get on a free list there. Go to, like I said, GATA.org, and then La Metropole Cafe, LAMETROPOLECIFE.com. You can sign up for a 2-week free trial and see if what I have to offer is of value.
GATA's Bill Murphy. Check it out. Highly recommend all of his work as well as Chris Powell's over at GATA's as well. Thanks for coming back, Bill. It's always a pleasure to have you on the show.
Thanks, guys. Really enjoyed it. Have a good weekend.
All right. For the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.